Hello, fellow traders. 'Tis I, the Rumpled One. Sunday, March 24th, the year 2019. Let's talk trading, weekly opening gap. But before we talk about the weekly opening gap, we're going to just do a little review on money and risk management, especially for those of you who are just tuning in. This week, the last trading week of the month, make sure your risk is set properly, along with your position size or stop loss. Very important. Okay, here we go. We have got some gaps to fill. We got 1, 2, 3, 4, 5, 6, 7. 7 opportunities to get a gap fill trade in. Did I count that right? 1, 2, 3, 4, 5, 6, 7. You can see here the euro yen has entered the lower wick zone of the previous week's candle. Look for price to exit. I'm thinking price might at least hit 125.29 on the rebound. Looking at the daily, we're under the yearly open. You can see here, red, 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 red. And this sure looks interesting. We're within the high and low the first day of the year. You can see here we're putting in the first day of the week here, and here's the first day of the month range up here. So you can see just exactly where price is in comparison to those opening ranges. That was a big daily candle there on Friday, wasn't it? And you can see exactly where we are. Three ball. Might want to go long at the line. You can see where price is in relation to these lines. That inside bar trade on Friday, did that one pay off? Now you see you've got some inside bars here. The Aussie CAD, the pound yen. You've got the pound dollar, New Zealand franc, and New Zealand US dollar. And you see here in gray, you also have some inside bar opportunities to take advantage of. As you can see here, we did not exit the lower wick zone to the downside. You see there was a gap up, but that gap filled. Got a range of 55, nobody over 100 at the moment. Here's the monthly D1 lowest open. Okay. Weekly H1 low, monthly H1 low. So you know where these levels are. You can trade accordingly. The buy zone. Pivot point, fading the pivot, pocketed a few pips. Price came down the other way, shot right through the short zone, and then you would have pocketed just a few pips. But hey, it's Sunday here. You're just in the Tokyo session right now. And the rat zone. I got a question on the rat zone and the wick zone, and somebody wanted to know what's the best time frame. Well, you see, you have to understand something. These zones stay the same no matter what time zone you're looking at, or time frame, or chart period. So it doesn't matter. Pick whichever one you want. The zones stay the same. In this case, though, if it puts in a higher high, it will move the zone up, and a lower low moves the zone down. But as far as time frame, if it makes a new high on M1, it's going to make a new high on M5 and a new high on M15, because we're looking at daily highs and lows. So it doesn't matter. And you can see there is a missed pivot right here for today. Here's the weekly pivot. So look for price to return to this area right around here. And then you can see. Now remember, we had some missed pivots up here. We had a point, a February. I think we had a couple of February missed pivots, but as you can see, price took them all out on Friday. Look at that. So right now we've got a missed pivot. Now, based on the pivot, you want to trade long, looking for a 124.72 move to the upside. Price action, you know the drill. One ball at the top, red at the line. One ball at the bottom, green at the line. Pro trade. Here we go, green at the line. Giving up about 10 pips or so off of that 124 even. And the wick zone, once again, doesn't matter. You can use M1. You can use H1. That's the one I prefer. You can use M5, M15, M30. Doesn't matter. You can use H4. These zones do not move for the day. And this is a 2014 indicator, just so you know. But you can also use TRO, HL5 to put the wick zones out. Just select high, low, and then top and bottom, and you've got it. As you can see here on one of my favorite trading screens, using these horizontal lines, there was a short, and right now Larry long trade looking long at 124.16. And as you can see, gradual up movement. Oh, maybe a couple of pips. Nothing to get happy about, right? At least not yet. As you can see here, long trade triggered, picked up about 3-4 pips, starts to come back down. Looking at the price action on the 1 minute candles, you can just bail out. Now, if you don't like that kind of quick 3-4 pip trades, you can always shift up to M5 or M15, and you'll get a slightly different signal on the candle formation, and it might keep you in the trade a little bit longer. I'm curious. You guys watching the video, anybody using the 2018 spread dot indicator? I'm just curious. Nobody's commented on it. I use it to time my entries. So when I get a signal from something else that's telling me to go long, well, if selling's going on, I'm not going long. I'll just kind of wait and see for the buying to commence. And that's when I will enter the trade. It just kind of makes it simple. And once again, if you want to understand this indicator, it's really simple. The this pink one right here, that's the ask, and the light blue, that's the bid. Now the green is the valley of the ask, and so when the bid gets above the ask, that means the buyers are buying, and when the pink gets below the red, that means the sellers are selling, because this is the peak of the bid, valley of the ask. And so right now we're just looking to see if the buyers, right here, the bid can get above this valley. If it is, then price goes up. Because see, if price doesn't get higher than this on the bid, price isn't going up. It's just that simple. And so you can see here, when the ask came below the peak of the bid, then you had that selling. You can see here, we had selling. You can look at this chart, but the problem is you got to keep these numbers in your head. So that's why I wrote this little handy dandy indicator. And timing wise, it really helps. Keeps you from jumping the gun. You think it's hit bottom and then you jump in and it keeps going down. Well, usually if you wait for the signal, you have a better opportunity. Now, does it always work? Of course not. Your results may be different, right? The disclaimer. But you can just try it and see if you like it. So that's pretty much it for the week, weekly open there, fellow traders. You've got those gaps to fill. Those of you who've been watching know that those are usually trades that pay off. So you might want to consider one, or you just might want to watch it, and then you'll kick yourself for not giving it a shot. See, remember, if you have your stop loss in place, you know the worst thing that can happen, barring unforeseen circumstances. So you enter the trade, you put your stop on, and then you don't have to worry about it. You know the worst thing that can happen. So that stop loss should give you the confidence to enter the trade and see what happens. So just remember, fellow traders, it's not what you trade, it's how you trade it. So get out there and drain the banks.